Number one is definitely not rolling over the 401k. And we talk about it all the time, Jim. We were just talking about it on break, and I want everybody out there to understand this is the main gist of this episode.
Yeah.
A lot of you have 401ks. Okay. Don't be afraid to talk about it. Don't be afraid to understand it. Don't be afraid to educate yourself on it. If you are not rolling over your 401k, you're doing it all wrong. And I'm not here to pressure you. I'm not here to tell you to just go do it now. Do it the right way, okay? Don't make a mistake. But you have to understand that 401ks are not meant for you to use, okay? They're meant for you to get to where you can use, okay? And hear me again. 401ks are meant for what? The employer to contribute to the investments. Once those investments are free to move, which a lot of you out there don't understand, you can move your 401k without having taxable problems, okay? This is something, it's called a rollover. That's what we're going over today. It's something that no one really tells you, but you can do. I'm here to tell you today, I can help out with that, okay? You need to be able to have more options, understand what you can do, and have flexibility, okay? All that comes from rolling over the dang 401k. Do not let the company tell you what to do, because who cares about you? Not the company. Okay, we all know that. We go over that every single episode. It's you and obviously your fiduciary, your personal financial advisor, which hopefully will be me. But, I think a lot of the times people think to themselves, man, I'm putting it in here in the company. Yes, the 401k gives you that ability for the company to contribute, right? But it's helping them too with taking the taxes, deferring the taxes. But it's not meant for you to and I guess it gets tricky because a lot of people are like, well, David, why can't I just leave it in there? You can. Your opportunity cost of leaving it in rather than rolling it over, compounded, you're going to really realize that in about 10, 20 years, trust me, because you don't have the options to compound and to accumulate the capital that you would if you just rolled over the dang 401k. If you just rolled it over and understood how to benefit yourself, right, and how to utilize and really transition that into a more strategic investment, that's what it's all about, folks. And again, I'm here to help anyone out. I know obviously we talk about a lot, but I try to pinpoint on one specific thing each episode. In this episode, I'm going to tell you again, and I'm going to tell you again. If you have a 401k, you need to roll it over. Okay, you need to understand how to roll it over. I can help you with that. Give me a call. We can do it anytime. Don't be afraid, okay, to have education. Even ask questions on how you can do it or where you can. Just give me a call, folks. That number is 850-565-1705. Again, that's 850-565-1705.
And this is episode 32 of the Retirement Planning Pipeline. And I'm pretty sure, I guess, 32 episodes. In each one of those episodes, we have talked about at least once why it's so important to get a financial advisor, someone like David, that understands you and your retirement plan so you can avoid some of these awful things that may happen, make you lose money in your retirement portfolio. And I also think too, and when you talk about retirees and unnecessary taxes, that's something that's not talked about enough either. So let me ask you this, David. How can retirees avoid unnecessary taxes?
I think learning, first of all, having the education, and I talk about education more than anything. Educate yourself on what the taxes are, okay? First of all, how your portfolio is taxed in general. Is it capital gains, okay, when you sell a product? Is it dividend interest, okay? Are you paying a 1099 form? Or are you getting taxes earned income, okay? These things all matter, right? With federal tax brackets, and obviously in Florida, you don't have a state bracket. But you need to understand that these rolling things over and taking out money out of your 401k can be really, really detrimental. And I come across people every week that take money out at the wrong time. Oh, 20 years ago, I took money out to pay this. And it's like, why? Like, what are you doing? Right? But you can't go back. You can only go forward. And I stress this to everyone that's listening today. Get your things, get your plan straight, understand what you're in, educate yourself now. Don't procrastinate, okay? Don't make the wrong move too fast. Don't make the wrong move too soon, okay? You can always plan the future. You can never go back and recreate the past. And I say that because a lot of people make financial mistakes and they realize that it costs them a lot in the future. The compounding atmosphere, the compounding mathematical formulas never give you the upside in the past. They give you the upside in the future. Okay. Utilize your investments, understand where you're at, plan those investments, know what strategies you're in, know what plans you are in, know what, anything, 401ks, 403bs, TSBs. And I know we don't go over the 403b side, healthcare plans, whether you're, you might be a nurse, or you might be in the hospital field, or, 403bs are a big thing too. They work kind of like 401ks. Okay. TSBs, same difference. My dad has a TSB, a lot of government contractor workers out there. If you have TSBs, that's basically a 401k for the government. It's the same dang thing. Okay. So I know I'm pretty broad on this episode, but all qualified plans, okay, you can have the ability to roll over and to do a lot with, right? Other than just leaving it in there. Now, I like to pull this up at the end of every single segment, because I feel like it's the most important part. And we're kind of reiterating what we're going over, but I think the final segment we can kind of talk about this, okay? And this is where I want all listeners out there to kind of put themselves in the back seat, okay? Kind of third person, all right? And this is where I sit every day in front of all my clients, okay? If you watched yourself, all right, and you were watching yourself make certain moves in the past, okay, and you know that you should have, that person, or in the third person, that person should have made moves, or maybe rolled over a different way, or not used money a certain way, or maybe didn't cause so much tax damage in the future, you would tell them, right?
Of course.
Right. That's what I want you to realize. Okay. Don't procrastinate. Use education, use math. It's not hard. It's very simple. Use the whiteboard. I literally love this. And it makes kind of brings it back to high school or third grade, right? You sit in front of a client and you just use cold hard math, and they go, "Oh my gosh, David, what the heck? This didn't even make sense to me, and now it does." It's not difficult, but until you actually educate yourself on some of the things that you don't know of and the corporations aren't telling you, that's when your retirement changes. That's when you start utilizing the money for you and not the company. And that's what I'm here for. And that's, I think, one of my biggest mottos in every single episode. And what I want to get out to every listener out there and every single person that's listening today is to understand, make sure you and your financial advisor are working for you, not for the company. If your financial advisor works for company A or company B, and that company is training them and they have a higher up, it's sad to tell you they're not working for you.
All right.
I hate to say it, okay? But if a company has to train someone, okay, and they have to go to a higher up, who knows you better, the financial advisor or the corporation?
Yeah, the financial advisor, of course.
So if the financial advisor is not making the cold, hard decisions, okay, that's where things change. And sadly, a lot of people aren't that way. They go to company A or company B, and the companies have platforms they use, and the financial advisors are using those platforms that they create for them, or mutual funds, or whatever it is, or whatever ETFs they have, into those strict funds. The company's not there for you, okay? The company's there for their own good. And it might seem like you might make some appreciation of values, great. But until you realize that the plan and the most important thing is for us, myself, is to know my clients better than anybody out there. And no corporation is going to tell me how to invest for my clients. And I will say that every single day, because I know you better than that corporation knows your account number, period. I know your name. I know your kids. I know where your money's going. I know all of it. The corporation doesn't, okay? They oversee the entire thing. Get someone working for you. Get someone to sit down, make a relationship, and understand what you need, your goals, your legacy plan, your income goals, what you want. It's not the government's money. It's not the corporation's money. It's your money. And I know I push this all the time, Jim, but I'm tired of hearing, well, they've done me pretty well. They don't care about you. Once you realize that, they might send you a gift basket because you have a certain amount of money every year because they make money off you. Once you realize that the funds that you're in and the way that you're invested in is just like everyone else, is the moment that you come Okay, David. Yeah, you're right. I need it now. And that doesn't always happen, right? Sometimes I think people misinterpret.